And by the way, if this is scary for you on Baba, please sell your shares. You can't handle it, and that's fine. Stay in your sphere of influence. Or you should have a lot less, or you should own a lot less of the company. If I own 20% of my portfolio on Baba, I'd be scared crapless right now.
I thought this was a funny start to today's video because I have invested at least 20% of my portfolio in Alibaba. Well, it was at one point. So it's time for us to discuss Alibaba in detail. I think we have had our fair share of doubts over this one. So I'm going to give you my completely biased thoughts on Alibaba. See, I'm invested in a big way into the company, so I am biased. No matter if I try not to be biased, I am biased because I want the stock to improve. So the best thing you can do here is to question everything I say and think for yourself. If this doesn't make perfect sense to you, then just dismiss it. Okay, поехали. So I think one of the hardest parts of investing is feeling confident in an investment. I put in the work to understand what's going on. I spent some time thinking about it, which regarding Alibaba, I've spent a lot of time. I actually made my first Alibaba video back on the 14th of June 2020. Before that, I was using Alibaba to find suppliers in my old business way back in 2015. I released a video on Christmas Eve 2020 last year when the price fell to $220, and at the time thinking, this will probably all just blow over, but I still didn't buy. And I kept following along all the way up till July 2021 after Monish Pabrai and Charlie Munger had invested in Alibaba, did I finally make an investment a full year after making my first video on the company. I paid about $220 thinking that's a pretty good start, but I'd like to get it under $200. That's where I'm getting a pretty good margin of safety, and at $170, I probably should load the boat, based on my discounted cash flow projections. I wasn't just picking numbers out of the sky here. Well, I sold puts at $200, then $180, then $155, and I was getting more and more shares. I honestly didn't expect to get them and was just thinking I would probably just get big premiums on my puts. I'm not exactly sure where my average price is right now, but probably around about $190 or something like that. And after even being more invested than I felt comfortable with, not planning to add any more shares, I had to watch the price go to 150, 140, 130, 120 and below. And no matter how much I have read and studied the great investors, no matter how many lessons they have taught me about expecting your stock to move all over the place, especially down the minute you buy it, well, I had serious money invested, and watching it decrease in value by like 40%, it was really tough, and it still is tough. The questioning just gets louder and louder in my head. What if I'm wrong? What if China actually does screw up relations with the US and bans all the foreign investors? What if the US kicks Alibaba off the exchange? What if this VIE structure is actually banned and the whole thing goes to zero? Well, these are all possibilities.
And guess what? If they announced this is being delisted today, cut that by 60% probably. That'd probably drop to $50, if not lower.
So with DD getting delisted, it could happen to any of the Chinese stocks, and if it does, maybe the prices get cut in half even from these levels. So let's take a step back now and just calm ourselves down. How I think about it is I think, well, what would Warren and Charlie do? And that's normally the question I ask myself when I make a decision about investing is, well, what would Warren and Charlie do? And luckily in this case, Charlie Munger has a big position in Alibaba, so I can literally do exactly what he was doing. In Q3, he was buying more. So that's a nice reassuring thought. Then I think, well, why did I invest in Alibaba again? So I'll recap that as well. Well, Alibaba is essentially an e-commerce play of China, and I like that idea. There's lots of growth. They have a great balance sheet. It's a very profitable business. They have great competitive advantages and lots of expansion upside. If this business was in the US, we wouldn't be having this discussion. The falling stock price is all about the macro government stuff. And that stuff is hard to discuss because I don't know what is going on inside the minds of the people in the government in China and the US. So maybe Alibaba isn't your cup of tea. And that's cool. I totally get it. Maybe you would like a company in Australia or New Zealand or England or wherever. Well, you'll need a brokerage account that you can buy, hold, and sell your shares in a safe, reliable, cheap way. Interactive Brokers is that platform. Go to the link in my description to check out a demo account and play around to see if you like how the platform works. I have some demonstration videos here on my channel if you do want some guidance. It's the brokerage account that I use personally, and I wouldn't tell you about it unless I was using it myself. All right, now back to Alibaba. Is it likely or unlikely that this whole thing goes to zero? Well, there is a chance. But logically, if we think about it, well, look, Alibaba supports millions of people throughout China through employment in the indirect industries, manufacturing, logistics. There are whole cities that rely on Alibaba. If the government kicked out all of the foreign investors, well, that would probably set the country back decades, as the trust to invest in the country would completely stop. And because Alibaba is so dominant, maybe the government will try to break them up, or maybe. But then we would own shares in all these spin-off companies as well. Look, any of these things are possible, but is it a 50-50 bet? I think it's less likely than that, but I really don't know. And this is where having Charlie Munger on my side, who is just about the smartest investor and most experienced investor in the world backing it, well, that counts for something. I even have a similar sized position to him in my portfolio. The pessimism around Alibaba is pretty extreme, and in these crazy times, I don't actually know if I'm right. And I never think I'm definitely right anyway. So I have to make sure that I don't go too big into this. Look, I think I might have gone too big into this position already. I just was getting greedy when the price was falling. I definitely won't borrow money to invest in it. I definitely will be okay if I am wrong and this falls to zero. I would be hurt, but I'm not going to be out of the game. And that gives me a lot of relief knowing that I'll be fine even if I'm wrong. So taking a backward step here, let's actually go inside Alibaba and see what's happening here. So revenue is a good indicator whether the business is growing. Simple as that. And if you have a look here at all the parts of Alibaba, well, can you tell me if this company is seriously in trouble? So let's focus down on just the 3 months ended September 30, 2021, and we're just going to look at the year-over-year percentage column for each of these. So this is comparing what the numbers were looking like in the third quarter 2020 compared to the third quarter 2021. So the commerce retail part of their business has gone up 33% year on year. We've got then China, the commerce, the wholesale side of the business is up 15%, international up 33%, international wholesale up 34%, the logistics up 20%, consumer services inside of China up 8%, their others is up 66%. So total commerce is up 31% for the quarter from the year over year comparable period. Cloud computing is up 33%. Their digital media entertainment is flat. Innovation initiatives and others is up 37%. Their total revenue year over year is up 29%. Is that a company in trouble to you? Of course not. This is exceptional. I would have thought actually it was going to be a lot worse than this. I thought that because of the pandemic locking everybody down inside of China last year, I know in the third quarter they were just sort of coming out of it a little bit, but they really weren't. There was a lot of lockdowns still happening. I thought it was going to be difficult to maintain this level here. So for them to be up 29% from this time a year ago, I think is exceptional. But earnings per share is where it actually looks ugly. The investment portfolio has actually fallen a lot in value, and with the increased investments in other areas, in their growth areas, the earnings per share is down 82% year over year. Now that is ugly, and that is probably another reason why everyone is getting scared. Their free cash flow is down 45% as well.
So they're always something to worry about, and the key organ in your body in the stock market is your stomach. It's not the brain. If you can add 8 and 8 and get reasonably close to 16, that's the only level of math you need to know. You don't need the area under the curve. Remember that quadratic equation and an integral calculus and the area under the curve? I mean, whoever cared what was under the damn curve? I mean, but you had to study this. You don't need this in the stock market. So all you have to know is you're going to see, it's always going to be scary. There's going to be always something to worry about. And you just have to forget all about it. Cut it all out and own good companies or own turnarounds. Study them and you'll do well.
So what do I think of all of this? Well, Peter Lynch would say that the stomach is the most important organ of the body. So do you have the stomach to be a shareholder? I guess this is a bit of a stomach test right now. Warren Buffett would say, well, be fearful when others are greedy and greedy when others are fearful. I think everyone's been very fearful about this, so maybe I should be greedy. But how do we know if this is one of those times to just suck it up and buy more and try to make a lot of money? Or is it one of those times where the fear, uncertainty, and doubt is completely justified and the business is actually going to go down? Well, then I turn back to the numbers again, and the company is growing their revenue well above 20%, and the guidance is to be above 20% again in the next period. Active users are growing at about 25% year over year as well. So the business is clearly getting bigger in both revenue and users. The growth rates are very strong. So I guess I still feel pretty great about Alibaba and what it's doing from a business perspective. I still see people buying stuff off AliExpress all the time here in Ukraine. The company has all these different areas that are growing. Sure, this is a big bump along the road, but this is not a company that's in financial trouble. Well, how do I know that? Well, I look at the balance sheet and see the big pile of cash and the little debt that they have. And I see that although their earnings and free cash flow was significantly down year on year, it is still making a lot of positive money. I see their business segments growing significantly as well. So if you can keep a long-term mindset, I think you will more than likely be rewarded. Peter Lynch, in that same presentation that I showed earlier, even said that he had stocks that he only made money on after the 5th, 6th, or 7th year, not the 5th, 6th, or 7th day. So let's just take it easy and give it a chance. I still think anything under about $170 is pretty good buying after adjusting even for that decline in free cash flow. So there's a lot of upside potential here. Now, I don't think we are on a sinking ship, but if we are, well, look, come join me and Charlie Munger and Guy Spear, Manish Pabrai, Robert Vinal, Bill Miller, David Tepper, Prem Watson, Ray Dalio, and many other investors. Look, it's a value investing party. Maybe we all are going to lose a lot of money here, maybe, but there are a lot of experienced, rich, contrarian investors on this ship. Join in if you dare, otherwise just don't worry about it. Investigate a company that is more interesting and more obvious for you to understand. I hope you've enjoyed this video, and I'll see you in the next one.